Hello everyone, welcome to today's video. I am your host Nikos Zabouras, Senior Financial Editorial Writer at FXCM. It is September 28th, just as the third quarter draws to a close and the fourth quarter gets underway, which of course includes the latest earnings season. And with today's video, during today's video, we will be talking about four artificial intelligence related companies which will be in my radar over the last stretch of the year. Artificial intelligence, of course, has emerged as the main battlefield in Silicon Valley after the launch of ChatGPT nearly a year ago, with tech giants racing for supremacy. This has been the main driver also for this year's tech rally. Now we're seeing progress on multiple fronts, from moving from standalone applications such as ChatGPT to integration in other products and services, in enterprises applications and more. So as I said, today we'll go over four companies that are at the forefront of this revolution and will be some of those that will be on my radar during this last stretch of the year. However, before we begin, as always, please read carefully through the risk warnings and the disclaimers. Once again, please read carefully through the risk warnings and the disclaimers, and please bear in mind that anything discussed during this video does not constitute investment advice and should not be construed as such. And with that said, let's get the ball rolling. So nearly a year ago, OpenAI kickstarted the artificial intelligence boom with its ChatGPT Chat AI chatbot. Of course, artificial intelligence has been around for a long time and has many aspects, but what was new with ChatGPT, the new component, is generative, which means the ability to generate text, audio, images, etc. on user command. Tech giants such as Microsoft and Alphabet jumped on this AI bandwagon and quickly launched rival chatbots and AI-powered search engines. And now they have been moving beyond such standalone applications and integrate the technology into existing products and services. For example, Microsoft's Office suite to Alphabet's Gmail and more. And of course, there is great potential to this technology, and we will be eagerly looking forward to see what else this brings and what other uses and implementations. And of course, as this technology expands, there's greater investment, bigger investment on AI, since it's a transformation technology that can change basically every aspect of daily life and not just how we search the internet. And this also goes beyond these customer-facing applications that we talked about, but it also has to do about the infrastructures, the semiconductors and the GPUs that power this revolution and enabled. And of course, Nvidia is the poster child of this back-end, let's say, part of the technology. And of course, this needs investment, and a recent research by Goldman Sachs showed that private AI investment will reach nearly 160 billion by 2025. So we sort of get the magnitude. Of course, there are many estimates out there, but we're just referring to this one from Goldman Sachs. Of course, this AI boom has also driven this year's tech rally, and let's go ahead and see this graph here, which shows that Nasdaq gained more than 40% during the first 8 months of the year, exactly driven by this artificial intelligence theme and propelled into a bull market. Now, the other companies referenced on this graph are what the group known as Magnificent Seven. Nvidia once again is standing out here, with its stock having roughly tripled during that period. And Meta Platforms comes second. Its stock has made a great rebound this year after the 2022 slump, partly because of its renewed focus to AI. Of course, the rest of the Magnificent Seven are also doing work on the AI front to a bigger or a lesser extent, depending on the company. Of course, this new technology raises various concerns and questions around privacy, bias, regulation, and other aspects, and it's still largely unregulated, so we're going to have to see how, if to what extent it is regulated and constrained. And alluding to those concerns were a group of tech leaders that called for a pause on the training of AI systems more powerful than GPT-4, because they can pose profound risks to society and humanity. After these introductions, let's go forward and after having laid the background, let's go forward and discuss about 3+1 tech giants. +1 because one is not a purely tech firm, that I will be closely watching during the next few months at least. Obviously, there are many other companies, not just very well known, such as the one we're going to talk about, but lesser known or more niche to a certain extent, that are doing important work on the AI front and are worth having an eye on. But we will just cover 4 big ones during today's video. And of course, we're going to start with Microsoft, which has the first mover advantage as it leverages the billions of dollars it has invested in OpenAI to quickly launch an AI-powered Bing search engine and leverage the technology into more of its products and services. It has also launched an AI-based advertising tool, this is very important, called predictive targeting, which can help advertisers reach new audiences and drive higher conversion rates. And this is important because it comes at a time which is crucial for the ad market as it tries to overcome recent headwinds from factors like high inflation, economic uncertainty, and others. And the firm has also now moved to the next phase, that of AI monetization, by charging a fee for the use of AI-enabled products. Over the summer, it announced a subscription service for a monthly fee with which corporations will be able to use AI tools on products like Excel, Word, and Teams. Now, despite its lead, we haven't really seen AI driving revenues and profits for the company. Yes, it did post record revenues in the last reported quarter, but its guidance was concerning for the soon-to-be reported one because it projects sales to actually drop. It also sees a decline in the important intelligent cloud segment. Furthermore, a look at rival Alphabet last results, essentially showed that its search engine dominance is not under immediate threat by Microsoft's advances and early lead. Now let's move over to the next company that we are covering today, which is none other than Nvidia. So the generative AI revolution would not be possible without the chip designer Nvidia, since its GPUs are essentially the only game in town when it comes to handling the demanding AI workloads required for the development and deployment of applications such as ChatGPT. Of course, Nvidia already reaps the benefits of its leading work on this field, since its stock has roughly tripled this year, as we already exhibited, and the firm also posted blockbuster quarterly results in August, fueled by strong demand for its AI infrastructure, as the company said. The revenues doubled from a year ago to new records, and profits ballooned in excess of 6 billion. And they look at this chart is telling. You can see how over the last quarter there was an explosion in the top and bottom line, and the company attributed that to the increased demand for AI infrastructure. Now, more importantly, the company signals strong appetite and output ahead. Its CFO, for example, expecting supply to increase each quarter through the next year. Comment made during the relevant earnings call, while CEO Jesse Huang spoke of about 1 trillion worth of data centers around the world that are in the process of transitioning into accelerated computing and generative AI. And that goes to show strong future desire, at least as per the company's execs. And of course, these expectations were reflected in their bid for forward guidance, as the firm expects further sales increase in the next reporting quarter. Now, despite this upbeat commentary and optimism, there are some concerns that the firm may be overly optimistic around future supply and demand, amidst, of course, amidst broader semiconductor production challenges and trade restrictions to and from, mainly to China. And of course, Nvidia now has a near monopoly to AI capable infrastructure and GPUs, but that will probably not last forever. Other firms are trying to catch up. Advanced Micro Devices, AMD, for instance, recently unveiled a new AI chip, the MA300X, to go up against Nvidia. Now, the next company we have here is ARM Holdings, which is a British tech company that creates sets of instructions and license them to other firms based on which they manufacture their processor. It is, of course, the main application of that is the mobile devices markets, where the company has a monopoly, basically, as all of the world's smartphones run on ARM-based processors. But its presence spans into more realms and, of course, artificial intelligence, where its designs, its blueprints are also essential. And, of course, trying to capitalize on this AI boom, the firm went public with its September 14 Nasdaq debut just earlier this month, which was, of course, the biggest hype of the year. And speaking on Bloomberg on that day, ARM's CEO said that you can't really run AI without ARM, alluding to that importance. Of course, in a testament to its AI importance, Nvidia, who, as we already talked about, is the enabler of this revolution, unveiled recently its next generation AI superchip, which is based on ARM's Neoverse. In fact, Nvidia had actually tried to acquire ARM a few years ago, as it was already doing leading work on the AI front before the boom, of course. But that acquisition was abandoned due to regulatory challenges. Now, with many tech heavyweights using its designs, ARM definitely stands to benefit from increasing spend on artificial intelligence, which looks like it's going to continue, because that could actually boost its license and royalty revenues. That's how ARM makes money, from licenses and royalties. However, its recent results are not exactly awe-inspiring. It had a net income of just 524 million in fiscal 2023, the year that ended in March, which of course is very low for its sky-high valuation in the stock markets after its recent public debut. Revenues also stagnated in that year, and another concerning aspect for the company is that 24% of its revenues derives from China, and it is concerning given the Sino-Western frictions and trade restrictions that we already mentioned. Now let's go to our plus one stock, and last plus one, since it's not a traditional tech company, but it's actually an electric vehicle maker, and may not be exactly the first thing that comes to mind when we're thinking of artificial intelligence. However, this technology is at the heart of Tesla. In July's second quarter results, the EV maker stressed its commitment to being at the forefront of AI development. And of course, this happens with the productions of its own Dojo supercomputer, which can boost various aspects of its business, including manufacturing. And Mr. Musk, during the earnings call, said that spending could be north of $1 billion over the next year. And of course, over $1 billion in total. Now, this supercomputer can definitely help it improve the autonomy, the autonomous driving capabilities, and the developments of its robotaxis, and of course, its humanoid robots. Now, robotaxis and autonomous driving are of critical importance for CEO Elon Musk. During the earnings call, when speaking about the variances in profitability, he said that autonomy will make these numbers look silly. That's what he said, in a testament, of course, of autonomous driving significance. And now, what sets Tesla apart from many other big corporations on the AI front is the vast amounts of proprietary data, and we'll come back to that point a little bit later as well, which of course it collects from sources like the cameras and sensors from the hundreds of thousands of vehicles it has sold and which are on the road. Now, it uses AI to leverage this data and achieve full self-driving, FSD. Mr. Musk, of course, believed that, said during the earnings call that FSD will be better than human by the end of the year, but there is no regulatory approval yet for full autonomy, and he has generally been optimistic in the past on that matter. In fact, let's go ahead and listen to what he had to say during the last earnings call.
I know I'm the boy who cried FSD, but I think we'll be better than human by the end of this year.
That was, of course, Elon Musk, Tesla CEO, on the earnings call of 19 July 2023, and you saw how he said that he's the boy who cried FSD. showing that he acknowledges that he has been probably overly optimistic. Once again, there's no regulatory approval yet, and it's quite unclear at this stage what Mr. Musk means when he talks about fully autonomous vehicles, full FSD. Tesla at this point is at level 2 out of 5 in FSD, which many other companies also have. 5 is full automation, level 5, the highest level, with 0 human interaction or attention required. And now back on the big data front. Companies with massive amount of real-world data like the ones Tesla owns can emerge as key beneficiaries of the artificial intelligence boom, and success on that front can unlock tremendous value for Tesla and giving an edge over its competitors who are making strides in the electrification. Of course, the main application would be FSD, which Mr. Musk thinks it's crucial, but also on other aspects as well, including manufacturing process. Now, having covered those 4 companies, once again, I need to stress these are just of the companies that are on the AI front, and we will be looking forward. There are many others. But just to wrap things up, the AI hype has moderated over recent months, stifled also by the Fed's higher for longer message in terms of stock markets. There are also concerns around the sustainability of this boom and around supply and demand of chips. And within this theme, we also talked about the Sino-Western's restriction on investment and trade of advanced technology. Progress, of course, is still ongoing. We saw this week Amazon investing in Anthropic, a leading AI firm with a ChatGPT rival named Claude, and that marks definitely a stepping up in Amazon's AI game. Every company talks about AI and pushes on that front, but on the other hand, this new technology has not yielded financial results for many of them. The obvious exceptions, of course, is Nvidia, which we talked about because it has already driven value for the company. And now we will be waiting for the latest earnings season, which is just around the corner, for update on that front from the related companies. Another thing we need to bear in mind is that AI is largely regulated at this point, and that could pose headwinds if it becomes regulated, headwinds in advancing the technology. In any case, AI is a transformational technology. It is sort of a World Wide Web moment, an iPhone moment, and can definitely shape the world and drive value for equity markets and companies that are on the edge, on the bleeding edge of it. So that's pretty much it for me. Thank you for joining me.